Let's get you updated here on the grain trade. I'm Marlon Bowling, your tour guide to the ag commodities. On the corn, our quotes provided by bar chart show that the corn is still under pressure, led by the nearby contracts to the downside. You have July down 10.5 cents, just a little bit under $8. We're at $7.99.5 right now. In the December new crop contract, we're down 7 1/4 at 7.41 1/4. Soybeans, July is down 4 cents at 17.13. We've been on both sides when changed in the overnight and early morning trade. You have November down 2.5 cents as we speak. In the wheat market in Chicago, first of all, you have July down 10.5 cents at 10.87 per bushel. In Kansas City this morning, you have July down 10.5 cents at 11.59. In the Minneapolis market, you have July currently trading at 11.73.5, and that is up a penny and a quarter. But from September on out, everything is lower from 2 to 7 cents. Meanwhile, July cotton, at this point, it's trading at 137.56, and we're down 132 points. New crop December down 92 points. On the outside markets this morning, we had a big rally in the Dow. We're up 285 points this morning on June futures. And in the U.S. dollar index, currently you have that June contract down 67 points. 100.350 is the last trade there. For those of you wondering about crude oil, we have June futures now $2.82 higher. So there they go the other way again at 105.01 per barrel. That's within 13 cents of its high of the day. Well, and now it's time to bring in Robin Cross of StoneX in Chicago for our weekly chat about the lumber market. And Robin, the lumber market looks a little quiet today.
Hey, good morning, Marlon. I'll take it. You know, it's good from the insanity that I'm usually dealing with at this time every week. So thank you for having me, and let's go through some prices. So far, May is sitting at $998.90. That's up a whopping $3.30, but not bad volume. We got 58 trades to start the day, but that volume was definitely carryover from yesterday's limit move, but we'll get into that a little bit. July is sitting at $959.50 right now. That's up $17.90 over there with 49 trades. You know, it looks like spread is still the dominant volume in here today, and that's kind of expected with, you know, expiration just on the horizon, right? So, you know, week after week, we've been talking about the extreme volatility that lumber has been experiencing. You know, it's normally a super volatile market pretty much my whole entire life, but 2022 so far has been the most volatile lumber most volatile lumber market in history. I mean, literally with a combination of massive daily ranges, low open interest, continuous limit moves. If you remember, we got up to 91% limit move potential just a couple weeks ago, and literally the worst transportation issues we have ever faced. You know, I always warn the traders continuously on the air with you, Marlon, is you got to wait for a mistake in lumber, okay? And I'll give you several examples this morning of being patient and waiting for those mistakes to capitalize have paid off, right? So let's take it all the way back in February. On February 2nd, we made a swing low of 900, right? At that time, and that was, if you remember, just off the tail of the winter transportation rally. So that was a big break from the winter rally. 900 at that time was a couple hundred points of discount versus the cash, right? So naturally what happens? Sell installs, market rips all the way up 577 points to get to March 4th's high of 1477. Then what happened? We go through March lumber expiration, and then the guys are looking around and say, hey, lumber's not worth this. There's too much geopolitical risk. We have too many, inflation's way too high. There's a lot of different like little parts of this market that guys really got to focus on, but there's no real consistent pattern or consistent feel other than playing the fact that the market goes to a big discount, you buy it, goes to a big premium, you sell it. So then what happened? So on March 4th, we got to 1477. At that time, it was about $120 premium to cash. Then it fell. May comes on the scene, takes out March's low, and technically speaking, May should be stronger considering we're into the building season. But that didn't happen because I think a lot of guys were expecting it to happen, so you just kind of ran out of steam on the high side, right? So the market falls all the way back down, make the swing low, I think, let me just look at my notes, I think it was like 829, right? But that was just before the holidays, and as you know from the many years we've been talking, Marlon, lumber tends to always go up during the holiday. I don't care if it's Labor Day, Christmas, Easter, whatever it is, the selling stalls, the market tends to rally. So that's exactly what we saw. When it got down to 829, cash has been slowly eroding and we really took a couple $100 out of it. But now, as I always say, buy discount, wait for convergence, sell premium, wait for convergence, and that's exactly what had happened. So at 829, we were a big old discount. Market rallies up to today's high of 1019. Well, cash print yesterday was 1,000. So if you're following, we went from, couple $400 discount to now a $20 premium. So what you're seeing take place, and that's why I'm not surprised we're not sharply higher today or anything like that, because all these guys, all these longs and forward sales that went on this big giant ride all the way down to new lows are finally getting back to where they can operate. So naturally, one of the golden rules of lumber, if the market gives you a second chance, you never miss that second chance. You've got to take it because it's so thin and so weird. You don't know how often you could get these chances. So at this time, I wouldn't necessarily sell the market. I still think that it's got to get up a little bit more before guys and hedgers could return, but the very least you should see is some profit-taking long liquidation. So I expect to see that over the next couple of days, today, probably the rest, and tomorrow going into the weekend. And then we'll see how the market's really starting to look before expiration. I do believe that a lot of guys, there was a lot of cash needs out there, but over the last 7-8 days of this thing rallying, guys have definitely been taking advantage of the cheaper prices and getting their stuff covered. So I'd still advise caution. With the volatility, you've got to be very, very cautious in here.
Absolutely. Well, I'm glad you pointed that out. And Robin, thanks for helping us navigate what has been one of the truly wildest markets in the last few years. And we always look forward to your update. Thanks a bunch. Appreciate it. Robin Cross of StoneX in Chicago. Don't go anywhere. I'll be back and take a look at your livestock trade right after this. Now to get you updated on our livestock trade today on a Thursday, let's go to the big board and we'll check on the live cattle futures as they stand right now. Well, our quotes provided by bar chart show June futures now 67 higher. We're at 139.30 per hundredweight. Well, that's basically about one tick from our high of the day. We're off of our earlier low by about 70 cents or so, 60 cents, I guess. The August contract up 67 at 140.82. So pretty strong performance so far in the live cattle. At least it's pretty solid. Look at feeder cattle go today. With the weakness over in the corn, you have the May feeders now rallying up $1.57. We're at 164.05. That's only one tick from its high of the day. And you have the August 135 higher at 174.82. So everything from May on out, way over $1 higher at this time. Over on lean hogs, we currently have June futures down $1.10. We're at 117.65, and July down $1.22 at 118.82. Wanted to recap the livestock summary from yesterday for you. We did have some movement out in the plains. We heard earlier that most of it took place on Tuesday, which is kind of a rarity. But we did have trade on a live basis at 135 to 140.25 yesterday. That would still be basically steady to higher than last week, and dress basis sales 230 to 238, and mostly 230 though, and that would be about $4 higher than last week. So that's how things are shaking out in our livestock trade. Suzanne, back to you.